Welcome back to 101 East. For the people who live along the Baram River in remote Sarawak in East Malaysia, getting hold of fuel for their boats was difficult and costly at the best of times. And now, with the subsidy cut, they're finding that getting fuel is costing them something like 60% more than just a few months ago. Awang Hassan is a local fisherman who's finding that making ends meet has become increasingly difficult. Here's his story in his own words.
Saya Awang Hassan, binti Awang Miji.
My name is Awang Hassan. I have 3 children and I work as a fisherman.
Saya sebagai seorang nelayan. Cuma berubah kehidupan.
Everything changes when the oil price went up. Now we must be frugal. We cannot afford to waste fuel now, so I fish nearby.
Kalau jauh tu ada lebih sikit.
If I go further away, there is more fish because there's not so much competition from other fishermen.
Susah, memang susah.
It is difficult. Our income is not fixed. Sometimes we get something, sometimes not.
Bagi enjin generator ini,
For the generator, one night I can only use from 6 in the evening to 10 at night. That cost me $2. I can't use the generator a lot, only when we need it, for the lights, fan and TV.
Kenapa tu hak app?
I want to ask the government, why is it that when oil is taken from Sarawak, that is sold at such a high price to people who live in Sarawak?
Tentang subsidi.
And about subsidies, why can't the government give subsidies to small-time fishermen like me?
Seperti seorang nelayan lah. Kalau sudah harga minyak naik.
Because if fuel price goes up again, I think I would have to lift my engine up and start rowing.
Welcome back to 101 East. This week we're talking about the rising cost of oil and its impact on the people of Malaysia in particular and across the world in general. My guests are Shahriar Samad, who's the Malaysian Minister of Domestic Trade and Consumer Affairs, Vijay Mukherjee, Senior Consultant from Facts Global Energy, and Charles Santiago, an MP with the Democratic Action Party. Gentlemen, before the break we were talking about the background to price rises, and Vijay, let me just put that point once again. The rising price is not necessarily a political decision, it's a global fact. Is it going to go on?
It is definitely going to go on in the long term. What we are seeing that the short-term market fundamentals may not justify what the prices are today. It might drop maybe in the next few months, maybe somewhere in 2009. But if you look towards 2012, 2015, there is definitely a supply constraint. The OPEC members are facing a natural decline of something like 1 to 1.5 million barrels per day of oil. And what it means is that they have to add that much amount of oil just to keep where they are today.
So the message is get used to it.
Get used to it, attract more for investments in the sectors that is needed. It is a sign for certain OPEC members to open up to attract the necessarily technical and foreign investment that they need. On the consumer side, it is a message to change consumption habits.
Can I get into this right now? I think the OPEC Secretary General, just as recent as 2 weeks ago, said there is an overproduction of 500,000 barrels a day. What is happening right now is speculation, where speculators are pushing up the prices in a very, very big way. And in fact, I think OPEC has lost the ability to determine prices. It is now being determined by Wall Street.
Let me stop you there for a minute, Charles. And Vijay, as a market operator, address the speculation.
I tend to disagree to some extent, is that I think speculation can drive oil prices up to maybe $10, $20 per barrel, but keeping it sustained, keeping the ride that we saw from last year, like mid-07 to what we're seeing today, a rise of something like $50, $60 per barrel, I think that is hard to be driven just by speculation.
You mean it's even difficult that the fact that large funds and are really into oil?
I think what is happening is that there is a long-term supply concern. There is a problem, a geopolitical concern. These are driving the price high. The hedge funds, the speculators are adding fuel to the fire.
All right, well, OPEC may have said that their production is up 5, but they also have their own political agenda, and I wonder to what extent we can trust that, because
they were the ones making the money.
Petronas, for all its fine qualities, is equally opaque in the information it gives the market. Can you tell us, is the supply constraint touching Petronas as well?
Well, it was just that it means that Petronas would, the oil wells that Petronas has to exploit will be in the deep sea. And these are more costly than getting oil on land.
But can you give us a sense of future production capabilities?
Well, they're talking about 5.5 billion barrels reserves, but as I understand it, the cost of extracting the oil is far more expensive than what you get from the Middle East or other land sources.
One of the issues, Charles, that you touched upon was, you know, we're facing now in a rising price environment, the necessity to try and do something about it. And you mentioned the public transportation system. Now, in Malaysia, this is a consistent issue. Tell us a little bit more about how you think the resources should be redistributed to cope with some of this in a public transport context.
Well, I think public transportation is just not unique to, the problems with public transportation is not unique to Malaysia alone, in the entire region. Whether it's Indonesia, whether it's the Philippines or in Malaysia. I think what the government should have done is essentially put together or put forward a very affordable transportation system, reducing private consumption, private vehicles, but more the public transportation. I think the government has failed in that. And also in 2006, when the government increased the price of oil by 30 cents, which actually gave the government something like 4.4 billion, which was then promised to be invested into an affordable transportation system, never materialized.
But that was the problem, because you can predict you'll save 4 billion ringgit, but then when oil prices keep going up, in the end, what happened was that you only saved less than a billion.
But Minister, I mean, Charles is right, it's a regional problem, but certainly Malaysia has a very, very inadequate public infrastructure when it comes to transport.
I think what we don't have is the management to manage the amenities and infrastructure that's already available.
Many would argue there's not even the infrastructure.
No, I think in terms of roads, in terms of roads, physical infrastructure. The problem is when we look at transportation as building roads for cars rather than building roads for transporting people. I think that's the mindset change that has to happen. And surely, and what we can see now is that when oil prices have gone up, there are less people begin to plan their journeys. People begin to plan the use of their own vehicles.
Vijay, the oil market, obviously you said earlier on, the price is the way you regulate how much is consumed, but how elastic is that market? I mean, do you think that people on the streets are going to stop driving cars because the oil prices are high, and how much impact would it have?
If you analyze the thing, if you look at the Asian markets, take a benchmark, say for example, the price in Singapore, the Mino Platts Singapore price. Many Asian countries, such as China, Indonesia, Malaysia, Vietnam, these are still below that benchmark price. At the same time, you have certain countries like Singapore, South Korea, Japan, which are paying comparable to what the developed countries are paying, or even more as compared to what US is paying. I think there is a threshold beyond which people start to get hurt. And our view is that people are beginning to feel the pinch, but I don't think they have hit the threshold where they say, we are not going to buy cars, we're going to stop driving. I don't think that has happened yet. I think that is going to happen towards 2012, 2015, when we see the real supply crunch, prices hit a high which kind of crushes demand altogether and changes driving habits.
So how would the DAP or any opposition in Malaysia align its political priorities in the context of this rising price? Would you keep the subsidies and do something else? Or?
Well, I think the government could have sequenced the increase in prices in a way where people could have absorbed it in a way that is not very hurtful to the family or threatening to the family. For example, one of the issues that could have been addressed is the transportation system, affordable food, for example. Now, there is a way to deal with this problem, and I think this is where we need to have a regional approach to the problem. And I actually am proposing the idea of an ASEAN food and commodity exchange program, whereby countries like Thailand and Vietnam, who are global exporters of rice, could provide an affordable rice to the rest of Southeast Asia and not at the international prices.
Okay, but Minister, from your perspective,
And oil as well.
Are the political priorities properly aligned now, or should there be more check?
I think certainly oil prices need to go up, right? Because I think this is the only way that we have to reduce this dependency on subsidies. But I have to point out that actually we're not just removing subsidies. We have restructured it in such a way, as I said, that there is also now subsidies for food, as well as restructuring petrol subsidies in such a way that not just everybody gets it. And there's now a system of giving back part of the subsidies to those, part of it back to the car owners.
The final word with you, Vijay, from a market perspective. Is it time not to talk about oil prices in a market sense, but talk about the cultural dependence on the motor vehicle? And do the oil companies themselves have to pay a bigger price?
You tax or you price things higher that you do not want people to consume. And you do not tax things that you want people to consume more. So I think that with oil being a finite commodity, it's what Singapore is trying to do, or what Korea is trying to do, is that they're taxing these heavily, so that they're discouraging people to buy more cars, bigger cars, and drive more. So they're giving a message to public saying that change your habits, move away from oil, go into other sources of transportation.
I think we'll have to wait and see whether that message actually gets through to the population. That's all we have time for, unfortunately, gentlemen. Thank you all very much indeed for talking to us today. And that's it from 101 East. See you again next time.